Hey guys, in this video I'd like to quickly speak about the difference between a trader and an investor in relation to the Bitcoin and crypto market. The reason that I want to talk about it is that I see so many people panicking because the Bitcoin went up or down just a few dollars and act in all kind of crazy ways. It is important to get a better perspective and only then make decisions. So when I say investor, I refer to someone who buys an asset and is planning to hold it for the long term. In crypto slang, it's called HODL, which was originally a spelling mistake that somehow became the common way to express long-term investment. By the way, if you are not familiar with crypto slang, you can check it in one of the latest videos of my free cryptocurrency day trading course. So if you are an investor, you see the trend, you believe in the asset and the technology behind it, and you invest for the long run. You don't get nervous or too excited if you see some declines. In fact, when the price goes down, these are the best time to collect more at a better price. And when the price goes really high, you might realize some profits and sell a small portion of your portfolio, but definitely not all of it. That way, you guarantee some profits, but you also keep the option for much larger gains. So on the other hand, there are the traders who try to catch the dips and the highs on a daily basis and make short-term trades in an attempt to take advantage of those intraday movements. Now you know that I love day trading and I even made this cryptocurrency course with all types of strategies. But even then, when you have the skills and you know what you are doing, the bigger amount should go for the safer long-term investment. And as a long-term investor, you have to be patient and have the proper state of mind. The problem with traders, and especially day traders, is that for the most part, they don't know what they are doing and they are losing their money quickly. If you are not 100% sure of what you are doing, you better invest, because it's much easier to lose your entire capital when trading shorter term. Most day traders are driven by emotions. They want to buy the dip and sell the high. And of course they do, but in reality the exact opposite is what usually happens. They get greedy when they see an all-time high, and then they feel this FOMO. And then when it crashes, they reacted to the FUD and they are hurried to sell at the low and save some of their investment. Now it might sound stupid to you, but the reality shows that most people act exactly that way. And this is what happens when you work without a real strategic plan. I invite you to pause for a second and think. Are you an investor or a trader? If you're an investor, then get a perspective and have a look with me at this all-time Bitcoin chart. You can see that not too long ago the Bitcoin price was merely $100. Look at where it is today. So don't you freak out if it went down $1,000 and now it's only $40,000. Think long term and be patient. At the same time, of course there are amazing opportunities for the short term, but you need to be careful and know what you're doing. For more strategies, ideas, and surprises, please subscribe and put on the notification, and I'll see you on the next video.